Hi guys, this is James, and this is today's edition of the Bag Hodler. And today I'm going to take a look at the price of Bitcoin and a little bit of technical analysis that will hopefully enlighten us in regards to the direction that this price is going to take in the upcoming few days and weeks. Although I would not bet on it if I were you. Well, first things first, taking a look at this descending triangle pattern right here. That's been the bogeyman of technical analysts and speculators over the last handful of weeks, I would say. It's taken up a shape quite reminiscent of the 2018 descending triangle pattern that took the price from $6,000 right down to around the 3.2K mark. And people are obviously afraid that this pattern that's now taken shape will have a similar consequence, with the price dropping down all the way to around 8.5K. Well, if that did indeed come to fruition, it would result in what some experts have called a generational buying opportunity, meaning that they do not ever expect the price to hit that same level after this drop. So yeah, if you're ready to keep stuff in those bags of yours, a downside break from this triangle pattern right here might give you the perfect opportunity to do that. The thing is, however, that from a statistical perspective, this pattern, the price is much more likely to break out of this pattern upwards. Uh, while some people dispute that this is even a properly confirmed descending triangle pattern, admitting that it is one, the statistical probability that it will break upwards is 53% in general, but when it occurs in an upwards trend, this probability grows to 63%, and that is quite significant. So what I'm telling you right here is that this baby right here is much more likely to be broken upwards. And in that case, the price might head up to about 10.9K initially, and then, according to some, all the way to around $15,000, which, well, pretty much puts the nail in the coffin of that generational buying opportunity that you may have been waiting on. Anyway, what if this isn't really the descending triangle pattern that it's hyped up to be, and it is instead a descending channel pattern that's showcased right here with this orange line? In that case, instead of a potentially bearish pattern, it would in fact be a bullish one, a bull flag, which is a continuation pattern. And since we're in an uptrend, a continuation of the trend would obviously mean a break upwards. So then again, the price of Bitcoin is much more likely to break upwards from this point on. Then again, if it does break downwards, it's still good because you get to buy more. And if it breaks upwards, then your bags are going to be worth more. So in either case, I guess that a proper hodler will be happy with the outcome. Now, what exactly are we looking at here news-wise? Because lately, with technical stuck in the rut of this sort of descending triangle pattern, lately the fundamentals have been the ones moving the needle on the price mostly, and this latest bounce from the brink of $10,000 all the way to 10,300 has apparently been the result of the ECB's announcement that it would cut its rates again and resume its quantitative easing program, which in effect means that the European Central Bank will continue to print money out of thin air, diluting the existing euro supply and possibly devaluing the currency further. Now then, the immediate impact of the announcement was quite visible on the Euro USD chart, where yeah, the rate dropped to below 1.095 at one point. But then again, it sharply rebounded, so it's like back slightly above where it was well before the announcement was made. Why would such a move be a positive one for Bitcoin? Well, it's obvious, as it once again showcases the frail nature of fiat currency system and the fact that the supply can be diluted at will with simply by printing additional money, pretty much what the Fed does with the US dollar. And obviously that can't happen to Bitcoin. All right, so this time around, not everybody was on board with the decision. As you can see on this chart here, the countries in pink opposed the measure, while the other countries are simply other Euro area countries. It's not clear what they have to say about it. But the ones in pink, and there's Germany and France in there, they opposed it. So yeah, it looks like people are slowly but surely turning against this quantitative easing sort of solution, which central banks seem to abuse over the last few years. What else is there to look forward to in regards to Bitcoin price impact? Well, the launch of Backed obviously should be very, very high up on that list. Scheduled to commence in less than 7 days. This launch is going to be a major milestone, and it is in fact going to occur right around the time when a breakout from this deadly descending triangle pattern is likely. So it might just be the catalyst that will prompt an upward or downward breakout. Some people are indeed getting cold feet about it, and yeah, because lately there's been a lot of hype about the fact that Bakkt will only provide yet another instrument for major market players and whales to short Bitcoin, thereby once again dropping the price into oblivion. But then again, if that happens, all it does is it presents the small guy with another opportunity to purchase some more and to add to those hopefully already heavy Bitcoin bags. On the other hand, I have to remind you that what the IC is offering through Bakkt are physically settled Bitcoin futures, and that means that in effect the actors who take advantage of this instrument will get paid out in Bitcoins instead of US dollars representing the value of the Bitcoins. So in theory at least, this will probably lead to more demand for Bitcoin, which in turn might act to prop up the price and to possibly even propel it upwards all the way to 100K, as Moon Boys like to state it. So what about the long-term prospects of Bitcoin? Well, obviously, on account of the limited supply, we have no choice but to be staunchly bullish in this regard. But we shouldn't forget about Gresham's law. Gresham's law states that money of lower intrinsic value is likely to circulate more freely than money of higher intrinsic and equal nominal value, which effectively means that bad money drives out good money over the long run. And assuming that Bitcoin takes up the role of good money in this equation, the prospects of it being used as a currency aren't too bright at this point. The fact is that because of its value and because it's such a perfect form of money, the hardest form of money ever invented by humankind, people are much more likely to hodl it than any other form of money. So when it comes to spending money, People will prefer to spend their fiat or to spend some kind of shitcoin that will probably step up to take up the role of bad money in this crypto equation, this future crypto equation, uh, thus sidelining Bitcoin in this role. People will want to hodl Bitcoin and they will want to spend it. That's the sad truth right now. And it's already looking like it's becoming reality. So if it does happen, Bitcoin will assume a role of store of value, sort of digital gold, and some other crypto will step up and assume the role of, the spare pocket change that people will spend instead of dropping their precious Bitcoin bags. All right, peeps, so that's it for today. Hit that like button if you like my video, subscribe to my channel, and ring that bell button if that's still a thing. Yeah, this is a brand spanking new channel, so the very first subscriber will secure a copious serving of my never-ending gratitude. And yeah, that's pretty much it.